There it is.
So
All right.
there we go. Hit the record button. So everyone, Dave Puts here again for JKP Holdings alongside Mr. Nathan Turner. Hopefully everything goes well today. My brain's a little foggy from allergies. I'm sure my voice sounds very, very attractive. So
not COVID though, right?
No, thank God. You know, we're getting through a lot of this stuff. It's just been a whirlwind of a couple days, in and out, just what it is. Trying to manage email at the same time. It's been difficult, but I'll get through it and just take lots of Advil right now and just push through, and you get through it and eventually get through. How you been? How things been for you?
Good. We so it's interesting. So we live in Quebec, just outside of Montreal. We intended to move here for a year 18 years ago. And so finally, just a couple of weeks ago, we were like, you know what? I think now's the time. Kids are getting older. So this is it. So we're actually listing our house this coming Monday. So I've been burning the candle at both ends. Yeah. Burning the candle at both ends. We've got to repaint the basement and just a couple of little small things down there. So it's been crazy busy trying to get all that done, but it's all good.
I'm not jealous of you for moving. I'm sorry to tell you. I just don't think I'd ever do it. Just amazing. So is this because the kids are getting older and things are just adjusting, or what's
the biggest thing? Yeah. We love where we live. We love our little town just outside of Montreal. All that's great. There are definitely challenges in living in a French community, and so that's a thing. So we're moving back out west, back out to Alberta, where I'm from.
Okay.
Just outside of Calgary. So same kind of thing, small town just outside of big city. So we're very much looking forward to that, but it's busy for right now. We'll list on Monday.
So are you moving? How far away from where you're at now are you moving?
So right now, Montreal is like right above Burlington, Vermont.
Okay.
And then Calgary is right above like Billings, Montana.
Okay.
So we're going other side of the country, back out to the Rocky Mountains. We'll be less than an hour from the Rockies, which is fantastic. I'm very excited about that.
You can
convince the kids that they're excited about that too. Yes, I can't wait. 40 minutes away from a much bigger ski hill with bigger runs and steeper runs, and so I'm very much looking forward to that.
Who's more excited, your wife or you?
That's a good question. Right now, with everything going on, both of us are just like, let's just get it done.
Okay.
We're busily trying to get that all set and ready, but it's exciting. It's fun.
Cool.
Nothing to do with notes at all, but it's fun and exciting.
Yeah. And you could do the same thing where you're at, right? Are you getting a smaller house or what?
To be maybe a little bit bigger, or about the same size. We did that big renovation here a couple of years ago, and so it's roughly the same size. And we'll be able to pretty much move straight across, which is nice. So we're pretty exciting.
That's exciting.
Yeah.
New stuff going on. Cool.
And that's the beauty with notes. You can do it from anywhere. I'm still going to be in Canada. I'll be on Mountain Time Zone instead of Eastern. That's really the biggest difference.
Okay.
Otherwise, nothing much changes.
So let's transition this, right? We're both getting much younger in our age here.
Yeah.
And one of the things we're looking forward to is this retirement word, which I don't know about you, but everyone I talk to, retirement doesn't look much different than I'm doing now. I don't see myself slowing down. Yeah.
My retirement plan is to have a portfolio of notes. And that's it. So really the same thing that I'm doing now, but I enjoy it. I can certainly do it as a retiree, and so looking forward to that. So that's down the road, but there's planning involved, and there's things that you have to kind of consider, and tax considerations and all those kinds of things come into play. And so
gotcha.
So we've got our guest here today to help us figure some of that stuff out.
Yes. So we bring her in. Lo and behold, Mrs. Kaaren Hall. How are you, Kaaren?
Hey, good. It's Kaaren. It's Kaaren.
Kaaren. Sorry.
Kaaren with an attitude.
Well, so you're an experienced financial know it all about money and everything else, right? You have a background in big bank stuff.
Stuff, but I'm not an advisor. I know stuff, but I'm not supposed to advise anybody, but we'll
So
do our best today.
how did you get started in this space?
Oh man, I was a little girl and I just dreamt of self-directing IRAs. I used to like journal about it. I could hardly wait till I grow up. No,
Oh
but
my gosh.
I took a path that a lot of people did, like working, one job and then finding your way into real estate in some way. So it started off with property management, got a real estate license. Years go by, but I get into mortgage loan servicing, right? Loan servicing, get into loan origination. So the front and the back side of that elephant,
Mhm.
Yeah.
And from that I got into self-directed IRA. So I'd already in my career covered all the asset classes that our account holders invest in. So it was a real logical transition.
Very interesting. So why do we care about IRAs? What difference does it make to the average Joe's life? And is it for just average Joes, or is it for everybody? Is it for only the rich people, or who's it?
Well, it's not for Canadians. Sorry, love you.
Not. It doesn't apply to me, unfortunately.
But it's for Americans. Anyways, if you have a social security number, so if that's you, you're in business. The only barrier to entry here is to have earned income from a job, active income. That's how the IRS sees it. That's the only barrier to entry. But does it make sense to self-direct? Well, that's the thing. It's like when you self-direct your IRA, it's not like we're putting it in some vehicle that's growing. I mean, it earns a teeny bit of interest, but you self-direct your IRA when you want to invest in alternative assets. For example, notes, is a good one. A lot of people invest in notes, performing and non-performing debt, secured and unsecured loans. Your IRA can be the bank, be the lender. Notes are a really big asset class, but real estate, precious metals are big right now. Whenever the economy goes a little haywire, people love precious metals, and we're doing a lot of that. So it's called alternative assets. It's a really big space.
So let's clear up a few quick things. Self-directing your IRA is not illegal.
Oh gosh, no.
Right? You don't have to put your money in the stock market, in a 401k, 403b, whatever your plan is. You don't have to do that. You can self-direct it. You do, but you don't, right? So you can also self-direct it. It's another option. Talk to your HR about it, but it's another option.
Yeah, a lot of times when you work for a company and you've got a 401k, a 403b, a 457, you may not have the option to self-direct then. You might have to wait until you leave the service of your company, and then you can. But like small businesses can have what's called a SEP IRA, which is a self-employed, a pension. And then there's also the solo 401k. So there are other things you can do as an employer, but most employers have other accounts. But with us, it's a traditional Roth, SEP, simple, spousal, inherited IRA, solo 401k, and also health savings account. You can self-direct all those things.
Cool.
So you said one thing that I just want to pick out there. Inherited IRAs. Can you inherit somebody else's IRA?
Yeah. So when you open an IRA, like, hey, today Nathan opens an IRA, and you name a beneficiary. So usually it's your spouse as a primary beneficiary, your children as contingent beneficiaries, but God forbid you pass. So what happens next is your beneficiaries, the money from your IRA goes directly into the beneficiary IRAs. And, so the beneficiaries will open new inherited IRA accounts, and there are special rules, a lot of special rules, and they're changing regarding inherited IRAs.
Gotcha.
I did not know that one. That's an interesting one. I hadn't heard of that.
Yeah, it doesn't go through probate or anything. An IRA in this sense is like a trust.
Okay.
So it goes directly from the decedent's account to the beneficiary's account. Basically, it works like a little paperwork, but that's how it goes.
Very interesting. I did not know that. So when you talk about owning notes, are there any restrictions in owning notes? Like for example, if I bought a note in my own IRA, can I then do everything that I would normally do? I can talk to the borrowers if I choose to, or have the servicers do that, or set up attorneys, all that kind of thing. Like I can manage that, or how does that work?
Yeah, let's talk about it. So with self-directed IRAs, there are special rules for sure. And it's like a game of keep away from these things called prohibited transactions. So if some of the people listening today are rule book kind of people, they can read about prohibited transactions in the Internal Revenue Tax Code. How fun does that sound?
Oh, awesome.
But if you want to, it's IRC, Internal Revenue Code 4975. You can go ahead and read that. It talks about, but I'm just going to distill it in about like 1 minute. So people can be disallowed to your IRA, your ascendants and descendants, right? Your parents and grandparents and their spouse, you and your spouse, children, grandchildren, their spouses, disallowed. A 50-50 business partner is disallowed. And a fiduciary, like your realtor or your CPA, a fiduciary, your attorney, could be disallowed. All right, so there you go. That's who can play the game. So your IRA can buy a note, but it can't be a note that was made to, say, for example, your spouse, a disallowed person.
Yeah.
And so you just have to, it's keep away, it's arm's length from these people, you know? So that's one thing to consider, no personal benefit.
One thing I learned too over the years, and I didn't know this a couple of years ago, was that any deal that I'm 50-50 with an individual, not related to, immediately becomes a non-qualified participant, right?
Exactly
so
right.
If me and Nathan are in a deal 50-50, I can't use my self-directed money to invest in something with him.
You guys, if you have a company and you're 50-50 business partners, then you're disallowed to each other. But if that's not the case, and you say, hey, I want to get in this deal, Nathan, you want to go 50-50 with me, that's different. But if you already have incorporated as 50-50 business partners, then you're disallowed to each other.
What if I did a deal with Nathan privately, and then I wanted my IRA money to do another deal with him? Could I do that?
Are you 50-50? Well, I'll tell you what, there is, yes, is the answer.
Okay.
Because there's an exception that you can, as long as you fund concurrently, you can do deals with disallowed parties.
And remember, everyone, check with your attorney on everything, please, right? So we have a bunch of people commenting in here. Cindy said hi, Robin said hi, and I know Bruce said hi as well. So I'm glad chiming in here. Throughout the time, I'm going to stay low my voice. Feel free to ask questions, and I'll forward them to Nathan to ask.
Yeah.
Okay.
Can you share a little bit about what are the benefits of using self-directed money?
Yeah, I mean, the main benefit is that you can compound your earnings faster. Don't we love that? And the reason you can is because when you have earnings, and it could be, could be from a liquidity event, could be from just monthly cash flow, whatever, that income is not diminished by tax. So any kind of retirement account is tax deferred or in a Roth tax-free. So you get to, so all the money that your IRA earns can go back out into the next deal, 100% of it. It's not. There are a couple of exceptions. There is this like 2 taxes where IRA can be taxed, but that's, kind of going into the weeds. But for the most part, yes, that's how it works. You compound faster.
Oh, that's great. And then you mentioned earlier, we said, as a Canadian, I can't have an IRA of my own. However, I can use other people's IRAs to go and invest. And I do that all the time. People use their IRA money to invest with me so that we can go both make money together, which is fantastic.
It's so smart. I think what a lot of people don't realize is that there's a $39 trillion pool of retirement funds that invest, that people like you who are, asset sponsors can tap into for your deals. And so your qualifying question for that would be to say, hey, do you have an IRA right now? Or do you have like a previous employer plan? Like something from your old employer. A lot of people do, and they just haven't rolled it over yet. And so then they can take that money and invest with you. So I think this really became apparent around 2008, 2009 is when we really had a boom in our industry. It's when I opened the company, uDirect. But it's because banks weren't lending, and so investors are like, where do I find the money for my deals? Where do I find, where's this money going to come from? It's not the bank. They won't even give me any money. And so the realization that there is this huge pool of retirement money that may or may not be doing very well in the stock market, let's move that over into alternative assets and help them do that, help those people to build their retirement using alternative assets.
So baby boomers could, if they had a bunch of money sitting in their 401ks and they retired and they want to control their money, they could move the money over, right?
Yeah, sometimes when you're 59 and a half and you have a 401k, you automatically can do what's called an in-service transfer. That's true. But I mean, you could be 25 and change jobs and have a 401k, you could roll it over. So it's not really about your age. It's more about, where's, if you've got the retirement capital to make, to really do something. It's like, you're not going to invest in a note typically for 10,000, right? It's usually going to be a bigger deal. So you just have to put that money away. And of course we have contribution caps. So it takes a little while to build a retirement account up to the size where you want to, invest in it, in a note, or sometimes you have to be an accredited investor, right? To do a deal, to do a note deal, because notes are securities. So sometimes you have to be, right, exactly. You have to be accredited.
And that's for my fund, it's only accredited investors. However, so the money that somebody has in their IRA, that would count towards their net worth. Is that right?
I believe it does, but you want to ask your tax person. Just sure. There you go.
Yeah.
Yeah, right. So it doesn't count your house, though. I know that's for sure.
No, not your primary residence, but it seems to me like your savings, savings account, kind of. That should certainly be counted.
And your other assets, right?
Yes,
that you
exactly.
have net worth.
Yeah.
And I think we'll be seeing the SEC getting a little stronger on that accredited thing. I mean, I think being accredited sort of means that if you lost the money, you could still, feed your family.
Yeah.
And they just don't, because these deals can be risky. So you really need to, of course, understand the risk.
Unless it's secured by real estate and it's done by somebody who's been doing this for years and years. There's
unless that, yeah. Hey, and there's risk in any investing, but without risk, Absolutely. There's no reward. So I think investors are people that are looking for, to take risks and make investments.
Yeah, absolutely. I've got a question here. This is a great question. Yvonne is saying, I guess she's got her IRAs with Fidelity. She says, Fidelity won't let me have a self-directed IRA. They said that it's self-directed in the stocks that I choose.
Mm-hmm. Right. So they kind of jumped on the self-directed bandwagon saying you can choose any stock you want, but a truly self-directed IRA, that's what we provide at uDirect IRA Services, one where you can invest outside of the stock market. So if Yvonne wanted to move, transfer her Fidelity IRA to uDirect to a self-directed IRA, that's a pretty simple process. We do that, many times a day.
What is the difference between you guys and a Fidelity kind of?
Well, think of this like the typical IRA versus a self-directed IRA is, because an IRA is an IRA, it's just the same rules. But the difference between self-directed and a typical IRA is like what assets you can put in this IRA bucket. Right. So for somebody who's working at Fidelity, they have licenses like maybe a 6 or 63 or 7 or something like this. And they're not allowed to deal in the real estate environment. But so now we've got the alternative asset pool. And so that's different. So they end up being two different things. Same rules for IRAs. It's still an IRA, but a self-directed IRA is a bucket for alternative assets.
And your company is designed for that alternative assets versus, and they could take it and put in stocks they want to, but you guys have the availability to do anything that's legally bound.
Right. Well, we have the ability to help them invest outside the stock market. That's what we're all about, outside the stock market.
Can you give advice on not what you should buy, but what things you can't buy? So if someone's about to make a bad transaction that's illegal, can you advise them, hey, listen, you can't go out and buy cars with us?
Exactly. People think they can. So, right, yes, we do. We offer a free consultation for anybody that wants to talk to us. And say someone is already an account holder, their account is open, it's funded, they found an asset they want to invest. Well, we're going to review those investment documents. And we're going to look and see, hey, wait a minute, it looks like you and the seller have the same name, the same last name. Are you related? Are you disallowed to each other? We're looking for things like that. And so there are times when we're able to catch things, but the responsibility not to commit a prohibited transaction is always on the investor, the IRA holder, because it's self-directed. It's sort of like when you go buy a house. I mean, when you go to closing doesn't tell you if it's a good or bad deal. They're not going to tell you how to write it off on your tax return. They're just going to help you complete that transaction so that now you own that house, right, Nathan? I don't think it matters where you're at. That's how it works. Yeah, they didn't tell you, okay, well, here's how you, take your tax benefits.
Yeah.
Because that's not their thing. And we're like that. We're administrative and we help you, get it to the right place. But we definitely want to talk to our account holders and anybody that's got a transaction that says, hey, is this prohibited?
Can you do Roth and traditional with your company?
Yeah,
And what is
traditional.
the difference?
Yeah, well, the difference is the tax treatment. So Roth IRAs are the only kind of IRA that can be tax-free for life. That's pretty sweet.
Mm.
But we offer the traditional Roth, SEP, simple, spousal and inherited, and solo K, and the health savings account can be self-directed too.
So I'm just kind of comparing it to the Canadian plans in my head. So a Roth IRA, trying to figure out which one is which. If you're going to put in like pre-taxed dollars, is that an IRA or is that the 401k, or is there a difference in the US?
Right. So pre-tax, in other words, the money has not yet been taxed.
Right.
That money goes into anything but a Roth. The Roth is after tax money.
Got it.
The
Okay.
pre-tax goes in. We have, I would say 90% of what we have here is traditional IRAs. And the
Okay.
reason for that is most of the accounts we have are rollovers from an employer plan. So a pre-tax employer plan normally will roll over into a traditional IRA, same tax treatment.
Okay. Yeah, so the Canadian version of the IRA is called the tax-free savings account, TFSA. The advantage of the TFSA is there's no age limit on when I can start taking that money out. The disadvantage is I can only put it into publicly traded assets.
Oh,
So, but
Yeah.
it's an interesting differentiation because it's, that not having that age limit, I think is great. But I'm limited. Like I can't buy, I can't buy notes with my TFSA.
well, I think that has to do with risk. I think that maybe the regulators think there's too much risk in alternative assets, but I mean, tell me, is there risk in the stock market?
Absolutely.
There's some risk, so that's investing, right? Am I right?
Yeah.
So with IRAs, there's no cap what you can invest in. You can do almost any deal you choose to do that's legal, right? Any deal you want to do with someone else, lend money on deals, lend money on apartment buildings, or even start your own kind of business, right? You can do any of those things.
Well, no, it's not going to be your own business because you're disallowed to your IRA and you're not allowed to have, present benefit. It's all about saving for retirement. So you can have it later, but you're not going to take your IRA and invest in your own business. But yeah, everything else is right. So whenever an IRA is investing, it's always in either a debt or an equity position,
Could you
an ownership.
Could you get into like a checkbook IRA where?
Sure. So a checkbook IRA isn't a special kind of IRA. What it is an asset that the account buys. The retirement account will invest in a special purpose LLC. So the IRA is open with money. You have a third party create the LLC. Your IRA, buys the 100% of the initial units of that account. And then we fund the money, put the money into the checking account. Now you've got your IRA money, as the umbrella and the LLC under that retirement account umbrella. So it's an IRA owned LLC is also called a checkbook IRA. And it's not a gift with purchase. A lot of people, well, where's my checkbook? It's like, well, you have to have a third party create this and it has to have special language. That's what it is.
Stock market, I can move money like quickly. How long does it take for you guys to fund a deal typically?
That was my
24 to
question.
48 hours usually. Yeah, typically 24 to 48 hours. We're pretty quick. And yeah, so it's really good. I mean, as long as everything's all queued up and the money is cleared and then you're good to go.
And Dave asked that, and this, but Dave asked that because in the note world, it moves quickly. Like once you've got an accepted bid, usually, you might have a week to do your final due diligence. But there are then those other times where, okay, I need you to fund tomorrow, where due diligence is already done, and all right, we need to fund tomorrow. And
Tomorrow.
Sorry about that.
With the self-directed IRA, if you want to talk about how long it takes, it's not going to happen tomorrow. You're not going to give us docs today and get it funded tomorrow, typically.
Yeah.
I mean, it happens, but I mean, we're going to under promise and over deliver on that one.
Sure.
And just say you got to give it a couple of days. But coming from the real estate world myself and really having ingrained in my body that sense of urgency, that you have, and especially in residential real estate, it's crazy. People, everything is now.
Yeah.
So that's what I hire when I hire people for, on staff. They have real estate experience. They understand the sense of urgency, and then all of a sudden we're going to do what we can to make things happen.
Yeah, that's a huge plus. I know and not all IRA companies are created equal in that sense, where some will take like a full week to get the money turned back out. And that can be a long time in a transaction setting.
Lose a deal.
And you could lose the deal.
Yeah.
And then there's others, if you can do it in 24, 48 hours, man, that's a huge plus.
Well, we're going to talk to you about the deal, and there are things that can hold up a deal for a week that have nothing to do with us, so we'll try to set your expectations up front the best that we know how, given the information we have available, but sometimes there are outside reasons that a deal can get held up too.
Mm-hmm. And then for anybody who's watching, where if you're doing a deal and the money is coming from, whether it's your own or somebody else's IRA, and the seller says, okay, we're going to close Friday, let them know the money's coming from an IRA, and just make sure that's up front so that there's an understanding that, it might take an extra day or two. And then
the seller understands that, but
Exactly.
if you don't say anything, the seller doesn't know.
Right. But if you say it and then they know that there's a potential delay there, it's fine. No big deal. It's not a problem.
Let me make a suggestion too to your listeners that you're a note investor, you need something happening, like, time is of the essence. Always request a wire. Never mark the box that says you want a check, because that check's going in the mail. Yeah. Unless you ask for overnight delivery, there's a fee for that. We pass on the fee that we get, but never check the box that you want to check if you're in a hurry. That's going to take longer.
All right. So we're kind of with the new kind of the beginner advice type stuff. Any ideas, like anything you can share about biggest mistakes that you've seen for like newer investors?
A couple of
common mistakes. It's
kind of funny, actually. I mean, since, knowing the industry as well as we do, but we saw somebody, by the way, who they wanted their IRA to buy a property. So they went to their bank to get a loan. So they're telling some mortgage loan officer, hey, I'm buying this house. Mm-hmm. So the loan officer's got this deal all queued up, ready to fund. And then no, an IRA doesn't take on regular Fannie Freddie conforming FHA, VA funding. So the poor loan officer who thought he had a deal that was going to close, didn't close, mm-hmm. because now this IRA account holder had to get a non-recourse loan. And by the way, if your listeners want a list of non-recourse lenders, we do have a list. I mean, it's not necessarily a list of people we recommend, but it's like for your convenience. So you can check them all out and see what you think. Sure. Because it has to be non-recourse money. So that is a real rookie mistake to think that your IRA could go to your regular bank, just like when you got the mortgage on your house, and get that kind of a loan for an IRA. You can't, because it's disallowed.
Got it. All right. So, and then another area where different IRA companies differ is on their fees. Can you tell us about your fees?
Yeah, our fees, I mean, I think everybody really loves our fees. We have a flat fee, annual fee of $375, and that's regardless of the number of assets in your account and regardless of their value. It's not on a sliding scale, so it's a great fee. We have a $50 setup fee. It's a one-time setup fee when your account opens, that flat fee per year. And then the first 10 checks that come in per year have no cost. After 10, after 10, it's a $10 fee. So it's extremely reasonable. Our fees are very low for the industry. A $15 wire fee, it's like half of what most other companies charge. So, we're not going to fee you to death.
Right. You guys make money. How do you make money? How does an IRA company make money?
Yeah, I mean, it's obviously not on the fees, right? Right. We make money like all banks and trust companies make money, and that's on, on the deposits that are, the money that's on deposit, not on people's assets. We don't make money on, if your IRA invests in a house, we're not making anything on that house. But just like banks, how they've got the Fed funds rate and they earn interest overnight. So we earn money the same way any bank would.
Okay. So it's to your advantage to have people have a larger IRA. Is that accurate?
Yes, but I mean, it's nothing I have control over. People have the size IRA that they have. They're going to invest what they want to invest. We can't say, we're not going to do an ad campaign that says, put all your money here, but don't invest it. I mean, that's not in our account holders' best interest. Yeah. It just works out. It works out so that everybody wins.
Yeah. And as an IRA company, you can't recommend any specific investments or even vendors necessarily, but you can say, you know, invest it, go out and do something with it, make your account bigger, because we all win.
You know, you're so right. That is a real sticking point right now with the Department of Labor and just the lawmakers. They just want to make sure that we're not recommending any investments to our account holders because we're not advisory. And the minute we do that, we become what's called a fiduciary. And if you have that label on you as being a fiduciary, it comes with a lot of rules. So we stay out of that ballpark entirely.
Right.
Right. And so it's up to the account holder. It's self-directed. The account holder is choosing their own asset, doing their own due diligence.
And then, so then that comes back to, that's where I'm at, is I'm trying to get it in front of IRA holders and say, listen, you need to invest and make money.
Yeah.
I'm one option of many, but
Yeah.
I'm an option, and I think I'm a pretty good one.
How many people with IRAs have money sitting as cash in a bank account? Like, you know, when that person, there's a lot of money sitting there on the sideline?
Just not doing
Well,
anything.
almost every account has some idle cash in it. In fact, you need to leave a little pad because 100% of the expenses of an IRA-owned asset have to be paid for by the IRA. So with a note, maybe you need somebody, because you were asking earlier, Nathan, like, can you do the servicing on your account? Well, you have to stay arm's length from that. You certainly couldn't get paid for it.
Right.
You can do the certain minor things, but if, say, for example, you need someone to collect that debt, well, your IRA would pay a third-party debt collector to handle that, you know? So you need to leave idle cash in your account for expenses. Almost every account has some idle cash in it at some point. We have thousands and thousands of accounts, so it works out like that.
So if you're prohibited from actively managing it, it would make sense to give that money to somebody else who can actively manage it for you.
I mean,
Well
manage
said.
assets. Oh, I see. Like for example, you. Okay.
Just as an example.
Yes, yeah. One of, yeah.
Hypothetically speaking. Yeah, but also too, like it's also good to have like a loan servicer. I'm sure you have, like, if your IRA is lending money, you know, you want someone to service that note for you.
Right.
So you need, or if your IRA has a piece of property, having a property manager,
Right.
having a third party in there doing the sweat equity is always a great idea. Yeah, you definitely need a third party looking out for stuff.
Right. We've got a question here from John Anthony. He's asking, can you open a self-directed IRA at 59 and a half?
Yes, you can. In fact, there's no age limit to having an IRA. Once you hit the RMD age, it's called required minimum distribution age, which has recently changed to 72. Once you hit 72, you can only contribute to a Roth. But as long as you have active income from a job or maybe house flipping or anything else that's considered active income, you can still contribute. 59 and a half is that magic age where you can take the money out without a penalty. Okay, you still pay tax, but at 59 and a half, you can take the money out without penalty.
Okay. And what is the penalty if you're 57?
It'd be 10%. So it's some expensive money.
That's
10% plus your tax rate, right?
Yeah, hello, yeah, yes.
Yeah.
Ouch.
So it could be 10% plus, if you're a 30% tax rate, it could be a 40% hit.
Yeah, it sure could. So you always want to have a great tax advisor, as part of your tree of advisors. You've got to have your insurance, your tax advisor, your realtor, perhaps your note specialist. You've got to have all these people in your tree of advisors to be able to be a successful investor, I believe.
So just to let everyone know that we actually have all the IRA comparison chart. uDirect is on our comparison chart on our due diligence portal with the fee schedule as well. But you can also reach out to Kaaren direct. Kaaren, can you just tell them what your website is?
Sure.
It should be easy.
Yeah, it's uDirectIRA.com, the letter U. And so you can just info us generally info@uDirectIRA.com. That's easy to remember. And if you want, we'll send you the list of non-recourse lenders. You ask us for a consultation. Hey, this is what I'm thinking of doing. Does this sound right for an IRA? How do I make that happen? Or, hey, I'm ready to open an account right now. Let's get this done. We're here to help. It's what we do all day.
So you need active income and a social security number and $50 to get started.
Yeah.
Can you open one for your kids, even if they're not?
You can. Yeah, yes, you can.
Yeah.
As long as your kids have active income. So your children have to have active income to contribute.
Yeah. So they can work for your company. I went through this. It wasn't easy to do. They have to be a certain age in our state and everything else. But it's just difficult. But yeah, I mean, how great is that? If you can get a self-directed IRA for a kid who's younger, it's awesome.
Yeah, or any IRA, even if it's in the stock market, you definitely, I got my kids started really young with a Roth. And so their money will grow tax-free. And later on, when they're my age, they'll thank me,
Yeah, I think that's what a fantastic way to set them up for later in life. That's great.
And what else? That's what we want for our kids, right? We want them to do well. So yeah,
Yeah.
absolutely.
Yeah. Oh, that's fantastic.
So one of the questions was, what's the interest potential and stuff? So I'm presuming interest mean is that could you put this money in an interest-bearing account while you're waiting for a deal?
Well, while you're waiting for a deal, it's going to earn kind of what the market rates are, a fraction of a percent. The idle cash does, pay the account holder a fraction of a percent. But no, it's really sitting there otherwise as idle cash. But the other thing is it's not at risk in the market. And that's great. There have been times we've had really big drops and our self-directed IRA account holders didn't experience a, one time 40% drop in the market back in was it 2008, it dropped 40%. So all the self-directed IRA people are like, yay, I have all the value of my cash. So you're not at risk in the market and that's a good thing. And then you do earn a little percent on the uninvested cash.
So one other question.
Okay.
Go ahead.
Yeah. Can you move over any time of the year? Or is there a certain period of time, like tax day, then you can move it? Is it open window?
Well, since it's April, we're getting hammered right now because people are, oh my gosh, I got to make my prior year contribution. And by the way, this year, you can make a prior year contribution up until April 18th. So you can make a contribution for 2021 up until April 18th. That has to be postmarked by that date or wired on that date, right? But yeah, no, there's no any day of the year, your IRA can be, can be created, funded, invested, as long as the banks are open and we can move money.
That's really cool. And then how the income that you make inside your IRA, is that reported anywhere? How is that?
Yeah, that's a great question. So if you take a withdrawal, we report it on what's called a 1099, right? And we tell the IRS, hey, this person had a taxable event. Mm-hmm. And then every year, the IRA holder, since these are alternative assets, we reach out to our account holders and say, what are your alternative assets worth? Tell us the value, give us a valuation. So it could be like a broker opinion of value. A lot of times with the note, it's pretty clear how much, the face value and what's owed. I mean, it's really easy usually to determine the value of a note. Precious metals, that's a market value. You can just Google that. Mm-hmm. But then we report that value on a form called a 5498 to the IRS.
Okay.
And we do the tax reporting and record keeping on the IRA accounts. The solo Ks, you're the trustee of your plan. So you and your tax person are filing if you need a 5500 easy or something.
So lots of options of different things you can do with your IRA.
Yeah, cool. Lots of options.
Somebody asked, you mentioned about working income. They want to know, does that include like a W-2 income?
It does. W-2 is money from an active job. Passive income is the opposite. So passive income would be, even note income is passive income because you're not out there sweating for it, sweat equity. Flipping houses is active income. I mean, your tax person can really break it down for you, but like Social Security income, retirement income is not active income. So active income from a job. And you can Google it. What's active income? What's passive income?
Yeah.
And arrive at that.
And you have to have some active income in order to contribute.
Yes, you can't contribute more than you earn through active income.
Oh, really? Okay.
Right. And then every single IRA type has a contribution limit, the most you can put in. Now, the amount of money you can earn from investing, that's unlimited, Mm-hmm. So, ask Peter Thiel, right?
Yeah.
Limited, but.
And if you don't know who Peter Thiel is, Google him. You'll find out quickly.
P-H-E-I-L, yeah. So, but as far as like writing a check from your checkbook and putting the money, you've got a cap, and it depends upon your age, your account type, and your income, how much you can put in. And also, the tax deductibility is in question too. So depends on how much you make. So there are rules. Some of it is covered on our website. But again, this is when you need your advisors to really be telling you, hey, this is what you can and can't do. This is, or, you know, this, your advisors will tell you, hey, this one is best for you. And then go for that.
All right, we've got a question here from Robin Jackson. She's saying, if you're a licensed real estate professional and actively manage your notes, isn't that income?
Ask your tax person. How do you file it on your tax return? You know, that's not my call.
Right. Okay.
So you mentioned when someone opens an IRA, it's not just an account. You have to create either a trust or an LLC associated with that IRA.
Wrong.
Okay.
Yeah.
So when you create it, is it just an account that opens up and you guys do the paperwork and we can start investing next month?
Yep, boom, or the next week, you know, or the next day. Once the money's there, you can invest straight away. So right, no, an IRA is like a trust. You don't need a trust in your IRA. In fact, we won't accept a trust as an asset, you know, so like a land trust or something. We don't accept those as assets. You don't need an LLC at all. If you live in California like I do, I mean, you've got to pay $800 a year to the franchise tax board just to have for the privilege of an LLC anyway. You know, you're going to pay some attorney $1,000, $2,000 to set it up for you. And so it's an expense and it's an ongoing maintenance to have an IRA owned LLC. So just make sure you really need that and make sure it makes sense, because once the IRS finally gets some capital and they start doing audits, you know, like as frequently as they used to, they're going to be looking at these IRA owned LLCs.
Sure. It's
low hanging fruit for them. So if you have an IRA owned LLC, make sure you're all buttoned up, that your accounting is beautiful. You've never spent a single penny on anything that isn't asset related, and that you followed all the prohibited transaction rules and not broken any, and then you'll be okay.
So just to make sure we're clear on what you can't do, can somebody, the most famous question I ever heard, can I paint a house that I own my IRA?
Okay, well, today the IRS isn't out there inspecting house painters, okay? As far as I know. I don't think they have the budget for that. So if you did it, I don't know. But if your IRA paid for house paint, and they would say, well, who painted your house? You know what I mean? So they would want to probably see an invoice for that house paint. Something like that.
How about retirement houses? Can I buy a retirement house from my IRA?
Can you live in it later on? So here's the thing. When you buy an asset with your IRA, like a house or any asset, it's supposed to be that you have no intention of ever using it personally. So usually when you buy a house, you buy it as an investment, and that's what you're supposed to do in an IRA. So just keep records, you know, like every time you solicit for renters, every time, you know, you hire a vendor, just kind of keep a diary, like, dear diary, today I, you know, rented my place to this person. And then later on, now, boom, you're 65 and you think, you know what, I like that little house. You know, I think what I'm going to do is I'm going to go get an appraisal. I'm going to give it to my IRA company. My IRA company is going to disperse that house to me, and I'm going to get 1099 for that market value. And then I'm just going to go live there because I'm going to own that property. I'm going to pay the tax on the market value. I'm going to take the hit, but then I've got that house. And that's what I'm going to do. So you can do that later, but really your intention for buying a house needs to be investment purposes.
Okay. Huh. Very interesting.
Keep good records. Yeah.
What are some tricks you've seen people use IRAs and that were very creative? And you have a good story that someone says, "Whoa, that was pretty cool."
Yeah. Well, I mean, we don't want, you don't want to be too creative. I mean, you do, but you don't, because you want to follow the rules. And the IRS kind of figured out the creative stuff already. But back in the day, I saw somebody who took their IRA, their Roth IRA, and bought tickets. Sporting event tickets. A ticket is literally real estate. Did you know that? A seat is like renting real estate. It is considered part of real estate.
No way. Huh.
So yeah. So then he sold it, didn't use the tickets himself, and then sold those tickets at a profit.
Oh. Wow.
Yeah.
That's an interesting.
Rinse and repeat.
Yeah. Well, it's not an asset class we take. I think because there can be abuse, and we want to make sure we stay in business. But I mean, I've seen it happen. There may be, another more expensive IRA company that will take the risk. But
yeah,
there you go.
So does somebody have to have a certain amount of money to start an IRA? Can they start it with $500 and be ready to go?
Yes, yes, you can, but the thing of it is, do you want to do that? I mean, obviously I want to open IRA accounts, but I also want to do what's in the best interest of our account holders. So if you only have $500, don't open a self-directed IRA, because every year you're going to get that fee, right? And then 2 years later, boom, you have no money and you didn't invest and you didn't prosper. We want you to prosper. So when you self-direct your IRA, have an asset in mind. Or like, I'm going to put this money here and it's going to be in this IRA. Then I'm going to shop for an asset. That's the way to do it. Open the account, fund it, then go look for your asset. So the money's there and you're ready to pull the trigger. You're not waiting for the money to come over, because we could wait 2 weeks or more for money to come over from another custodian into the IRA. So if you've got your account open and funded, it's loaded, ready to go, you find your asset, boom, pull the trigger. We review your docs and get your deal funded.
Just trying to see if there's any more questions we have from other investors and just make sure. And then we'll get to our.
So when did you start uDirect?
In 2009.
2009. Oh man, that's a good time.
Yeah, it was just perfect, and I just bootstrapped the whole thing. And it was all because of the vast number of real estate investors. And remember being able to buy houses on tape?
Yeah.
Yeah.
You're lucky if you can find a house for sale right now, It's the market's tight. So obviously there are market cycles, but it was a really good market cycle for sure for investors.
Great. Oh, that's great. That's great. All right. So then we're always trying to hypothecate. We're always looking towards the future and looking to see. So you've got your real estate background and now you've got the IRA present. What do you see for the future? Are we heading towards more real estate becoming available because of certain circumstances, or what do you see something coming down the pipe?
Okay, well, also not an economist, but what I hear, the conventional wisdom is don't be looking for another housing crisis.
Oh, really?
And the reason for that is that we've just underbuilt, right? During that recession, we had like a decade of nobody building houses. And what do we have? Like I have kids and now they're at the age they want to go buy a house. So there's one, now I have a house, but now there's 2 more houses that we need. We need 2 more, in the supply chain. Are those houses there where they built? In California, they passed a law here or whatever, maybe it was an edict from our governor, that you can only build multifamily. You can only get multifamily permits. Unless, of course, your house burns down, then you can get a single family permit. But right in California, we're only building multifamily now. So do I think that we're going to have this major glut of available houses? I don't see that. If there aren't, we just have more people. So it's just a numbers game, supply and demand.
Interesting.
Also, rates are going up, right? 6 more rate increases, they said this year. The Fed said that this year.
Yeah.
And so that may make it less attractive to buy a house because the houses are going to be more expensive. It might slow it down. But as far as the number of people that need to live in somewhere, need to form a household, I think that number will increase faster than the number of available dwellings to put them in.
Unless people just buy houses on Metaverse, then we'll be fine.
Right. Live in someone's garage and live in the Metaverse. Yeah.
And you could buy crypto with your IRA.
Yes, you can. Yes, you can. Is it the Wild West? Just saying. Can you? Yes.
Yeah.
So Mario,
yeah.
one more question. Go ahead. I'll let Marco has a question. Go ahead. I'll let.
Sure. So Marco Barrio's got a question. He says, could you talk about partnering with my solo 401k? So he says, so me personally partnering with my 401k.
I'm saying don't do it. Okay. That's what I'm saying. There is a special DOL ruling, DOL 2000-10. Okay, that's the citing if you want to look it up. That means in the year 2000, the 10th DOL ruling said something about investing together with your IRA. But how do you prove to the IRS agent who audits you that you receive no personal benefit from your IRA investing? It's tough. So I recommend, I wouldn't do it. I wouldn't do it. There's that fine line that maybe you could. So I'm just saying, really consider that before you do it, because you could run in. And so what happens when you commit a prohibited transaction? We didn't even talk about that.
Oh yeah.
Your IRA is like this tax protected bubble, right? Well, your IRA commits a prohibited transaction, boom, that bubble bursts. And now all that money becomes taxable to you with possible excise taxes and penalties, right? So you run that risk. You know, with especially with IRA money, I'm super risk adverse in that regard. It's precious money, my opinion. Maybe somebody else has a different opinion and they can, you know, invest according to their risk tolerance. But I'm just saying, if you want to know what I think, that's what I think.
All right. Very good. Is that all of our questions, Dave? That was
I think so.
good discussion on that. That's
It
good.
was awesome. I was informative, very educational.
Yeah.
It's one thing you have to think about constantly, right? Because the IRA is a very great vehicle,
Yeah.
but it can be disastrous if you don't treat it right.
It is, it's super easy to avoid prohibited transactions like landmines, but that's why you talk to us. Hey, this is what I want to do. We say, okay, here's the path to get there without stepping on it.
Yeah. Yeah.
Cool.
That's very good.
Well, thank you so much. uDirect.com. Take a look at it.
DirectIRA.com.
uDirectIRA.com. Their fee schedule is actually on our portal as well. So if you want to see that anytime, you can go log in and look at that. Reach out. Okay. Right. The company has been around for a long time.
Yes, 13 years.
Right.
Yeah.
They know the people. You guys have been at conferences. You've been around for a while. Take a look at it. I know it's cheaper than what I'm paying. So it's something I definitely got to look into. I'm paying over $1,000 a year. So it's definitely something I should look into. So
There you go. We'll talk.
yes.
Very good. Well, thanks so much, Kaaren.
Thank you, gentlemen.
Thanks.